Welcome back. You're watching The Money Show. And, you know, it's an interesting topic that we've selected for you. I was prompted by my producer on this because she just bought a new car for the family, and she figured that she is going to have to pay auto insurance every year for at least a little while now. So we decided, let's talk about how you should go about shopping for the best possible auto insurance options available, and in fact what you need to bear in mind, how to reduce the premium if at all you can do so. My guest today is Sanjiv Bajaj, the Joint Chairman and Managing Director of BajajCapital. Thank you so much, Mr. Bajaj, for taking the time. And really the most basic question is, how is that premium determined? I understand that the first premium that you pay is determined by the size of the car that you buy, the power of the car that you buy. What affects it from that point on?
See, internationally, the premiums are determined by the driver. Whereas in India, we determine the premium based on the car and the value of the car. Because in India, the concept is that a typical Indian car will be driven by the whole family. So it is very difficult to attach the premium to a person. So we attach the premium to a car. So it depends on the car, the value of the car, and the kind of cover that you are looking for. And that determines the cost of your premium.
Okay. Now, what happens next? So what are the factors that you need to bear in mind? There are a few factors that can affect your premium either going up or going down. One of them, of course, is the no-claim bonus. What do you need to bear in mind, Mr. Bajaj, and how do you get the best deal?
Yeah, so what you have to bear in mind, there are two types of covers available. So one is called a third-party cover, which is what is required as per the law. That means that your car is not covered, and what you are covering is that in case you end up hitting someone or you're damaging somebody else's property, the compensation you'll have to pay to that person is covered. And that is what is required by the law, because what they are saying is that, look, if you go and kill someone and there's some compensation to be paid, then that needs to be paid by the car owner. Now, whether the car owner pays it or the insurance company, and they know that this compensation can be huge amounts. So they expect everybody to buy a cover for it. In addition to it, there's a concept called own damage and theft. So together they are called comprehensive insurance. So that means comprehensive will cover the third party in case you end up hurting someone, and it also covers your own car. So look, if you have an accident, your car gets stolen, or something goes wrong in that sense, then you have a coverage for that. And when you own a car and you buy a car insurance, for every year you don't make a claim, you get a no claim bonus, which keeps adding up. So you start with 15% for 1 year and it goes up to 60%. And the best part of this no claim bonus is that when you sell your car, and you can take a 60% discount voucher from your previous insurer, and you can transfer this no claim bonus onto your new car. So on the old car, the depreciated value may be lesser, so you may be paying a much lower premium. And but when you buy a new car, if you've got a 60% discount on the total insurance, you get a substantial. So it is very important to be aware of this no claim bonus, and that plays a big role. So for every year that you renew your car without claim, your insurance premium will come down in the subsequent year, because you'll get a 15% approximately type of a discount. So you have to take a conscious call. Suppose your premium is 20,000 rupees. So you should only make a claim if that amount is more than 3,000 rupees. Otherwise, you'll end up paying more premium than the amount of claim that you would have recovered.
I kind of got an answer to the question that I was going to ask you after this next one, which is should you pay out of pocket for certain things? So you've answered that already. If the amount is not a significant amount, you should ideally pay out of pocket. But having said that, there are a few different policies that you get within that initial differentiation which you just made, right? Which is that you can have some deductions that can make your premium lower, and there is a zero debt policy which, as I understand, covers the entire thing from bumper to bumper. So how do you determine which you should go for, Mr. Bajaj?
Yeah, so it is very important for you to understand the type of policy. And most of the people say, look, I'm not happy with the car insurance, or car insurance didn't work for me. It's not because, they got into a wrong insurance, or they had a bad claim ratio experience. It is the bad claim experience is due to the fact that they didn't understand the policy they bought or the product they look at. So, my recommendation to people is always have an insurance broker to help you, who can help you understand. But let me just, make it simpler for you and tell you about some of the coverages available. So you have a choice between in a comprehensive insurance, you have a depreciative policy or a zero debt policy. Now what a depreciative policy says, suppose your car is 3 years old. So all the parts, especially the plastic parts, also are 3 years old. So suppose a bumper costs 20,000 rupees and there is a 30% depreciation on that. So the insurance company on a replacement of a bumper where you pay 20,000 rupees will only pay 20,000 minus 30%, which is 14,000 rupees. So that's where you'll say, okay, why didn't they pay that 6,000, or why do I have to, take care of that extra? On the other side, there is a zero debt policy, which is called zero depreciation, where whatever is the part replaced, despite the fact, however old the car is, whatever is the depreciation that you have claimed on that, you will get the full value of the part. So, if it's a 20,000 rupee bumper, you'll get the 20,000 rupee bumper. If it's any other, part where there is a depreciation applicable, you will get that, you'll get the full value. And the difference in the premium today between a zero debt policy and a policy with depreciation is actually not that much. It's a very minimal amount. So most of the people end up buying the policy with depreciation because they don't know that zero depreciation is a option available. Next thing that you have to decide upon is whether do you need a consumable cover or not. So, consumables are the things which are like nuts, bolts, oils. These are consumables. Now, this is something you can avoid because, at the end of the day, the cost is not much. And you have to understand, look, it's better for me to pay a lower premium than a higher premium and claim for something which is going to be 500,000, 2,000 rupees. So at the end of the day, I don't think consumable cover is important. Now, the next important thing you need to see is that whether do you want the claim to be paid on the depreciated value or return to invoice. Now, this is something very exciting. Okay, suppose you have a car which is 5 years old. You bought a car which was worth 15 lakh rupees. But today the value of the car is only 5 lakh rupees. And when you buy the insurance, you're choosing the IDV of 5 lakh rupees. Now, a lot of people, the car gets stolen or has a total loss in an accident. Now they say, look, when I buy a new car, I'll buy a car of the same class, of which is 15 lakh rupees. I'm not going to buy a 5 lakh rupee car because I bought a 15 lakh rupee car 5 years back. But your insurance claim would be only 5 lakh rupees because that was the insured declared value of the product, because that was the depreciated value. So people have this, okay, my car was 15 lakhs, I got paid only 5 lakh rupees, now I have to spend 25 lakh rupees to buy a new car. So there is a concept called return to invoice. So what it says that, look, if you have this model, this was available at 15 lakh rupees, even if the depreciated value was 5 lakh rupees, you will get, the claim of 15 lakh rupees, which is the invoice value of a new car. Of a similar make and model. Suppose this has gone up to 16 lakh rupees, then you'll get paid 16 lakh rupees. Now this is a great benefit, but it is slightly expensive. So who should buy it? If you're in a very theft prone area, then you should buy it. Or if you travel a lot and especially highways and you feel you can have an accident where there can be a total loss, then you should buy a return to invoice, which will enable you to buy a similar car of similar value and without any depreciation even after a couple of years. So it makes sense to have that. In addition, there are other things like roadside assistance, which is again not a major cost. You can decide whether you want to cover it on your own or you want to cover it through your policy. There are two very important things that you must cover, and especially if you are buying a high-end car. which is one is the engine protection cover. This is important for everyone. Just to make you understand, suppose there is water logging and you drive your car into the water, and after some time the car stops, and since the water level goes above a point and your engine seizes, so you have to get the engine replaced. It's a lot of expense. Now, would your insurance pay for it or not? So a lot of people don't know the answer to this question. The answer is no. It doesn't pay for it because it was your choice to go into the water, and water is not an accident in that sense. Okay, unless some car hits you and you fall into the river or something like that. So it was not an accident. But to cover this, and this used to create a lot of confusion and a lot of pain amongst the customers. So now there is an engine protection cover, so which you pay a slightly extra premium. And in case there is a water logging situation and due to that you lose your engine, then that it pays for the replacement of that engine. So this is a must-have for there. Next, if you have a high-end car with the run-flat tires, so those tires cost 1 lakh rupee each. So a lot of people don't know that typical insurance policy doesn't cover tires. And and if you have something goes wrong with the tires or you have an accident with the tires, they break. So you should have to buy a tire cover. So that is also a very add-on to have. So these are the important ones, and then there is the key replacement policy, because today keys of high-end cars today are costing 15 to 20,000. So a lot of people choose to buy the key replacement also.
Absolutely. Mr. Bajaj, I think that this is the most comprehensive conversation that we've had on auto insurance, and certainly a lot of our viewers who have indeed just become car buyers have a lot to bear in mind the next time they go out to buy a policy. Thank you so much for taking the time.
Yeah, let me just add one point. Okay, guys, please understand that in a car insurance, the rate you see on the website is not the rate you will always get. You can actually get a cheaper rate because these rates are slightly negotiable, and it depends on the person, the situation, the place. So it always make an effort to go to a broker, see the quote you are getting, ask him, look, can you get me, what extra can you get, how can you get the rate reduced, and these are very much possible, and especially if you have a bigger car, then it will make a lot of difference. So do keep that in mind also, because here these are not like a life insurance rate or a health insurance rate that what you see. So these are underwriting based depending on what you buy, who's buying it. So the rates can go up, can go down to a certain level. I won't say they'll go up because you see the rack rate on the internet, but they can go down depending on the situation.
Right. Thank you so much, Mr. Bajaj, for taking the time.
It's my pleasure to be with you. Thank you.
All right. Bye. Now, thank you. As the economy is regaining momentum, hospitality industry is back on its feet, and Pride Sun Village Resort and Spa Goa is creating a hygienic, safe and luxurious experience for both business as well as leisure travelers. Take a look at this special feature.